8 points higher in pre-open, so nowhere near what the SGX is indicating. We'll keep an eye on that. Gautam, just wanted your thoughts on cement. That's been a bear market which is now going on for some time. Your thoughts, Ambuja also after the numbers, but it didn't fall much, but there's no big rally.
Anuj, this is a space which has been constrained for last 10 years in terms of profitability. In fact, if you were to look at one data point, the cement profits of the CNX 500 universe 10 years back was 10,000 odd crores, and in 2018 also it was 10,700 crores. So virtually there has been no profit growth, while there has been a lot of noise about, in some segment of, some regions we have seen some price hikes and then they are withdrawn. Volume growth has been pretty steady in the last couple of quarters at around 10-12%. But till the time price growth comes back, I don't think it is still an investable sector right now. Of course, there can be some one or two bottoms of opportunity in that space. But from a top-down perspective, it still looks avoidable to me at least. Plus, you always have the specter of cost going up and down every alternate quarter. And that further constrains the flow through to the profitability. And plus, you also know that the largest player in the space is looking to gain market share. And that would prevent a lot of other companies in that space from taking prices up.
Okay, Gautam, we have lots more questions for you. Do stay on for a minute. We just have to go through with what's important for trading at 9:10. Ashwini, your 9:10 call?
9:10 call, I would think if you get a 20-30 point dip, buy Nifty, Bank Nifty, and Havel the buy with the stop 690. Target of 710.
Okay, Sudarshan, your 9:10 call?
Well, the Nifty is a buying opportunity, so is the Nifty Bank, and whatever the dips are, I can't say, but you buy them. Your stops are 620. L&T is a buying opportunity for the day. Buy L&T with a stop at 1265 and 1290 as a target.
Okay, and Mitesh, what about you? At 9:10, what would the big call be?
I would choose a sell on Amara Raja batteries with a stop at 740 for targets of 690.
Okay, gentlemen. Just coming back to you, Gautam, I wanted to ask you about, the banks that we don't talk much about. Every time we ask analysts, they stick with ICICI, Axis and SBI and the conversation gets over. What about RBL, Bandhan, Federal, DCB, the mid-level banks, some of which have done well?
Yes, absolutely, Lata, and we like two of the names you mentioned, RBL and DCB. If you look at RBL, it's been growing consistently above 30%. Even going forward, the expectation is of 35% profit CAGR and loan growth CAGR. Plus, they've been doing some good job on the credit card front, joint association with Bajaj Finance. Secondly, even DCB, if you see 1.5, 1.6 times forward book, loan growth of 22-23%, plus earnings CAGR of 25-26%, and asset quality has been reasonably stable at less than 1% net NPA. And one of the biggest concerns that the market had with DCB was on the cost to income ratio post their significant expansion in branches and employee. Even that seems to be getting addressed now. In fact, they're guiding for 2.3 cost to asset ratio and continued expansion in ROE. So I would be a buyer in those names right now.
Okay, three more stocks, in the auto space, the non-index large caps, as we call it, Bharat Forge, Motherson Sumi and Ashok Leyland, all three at new lows, Gautam. Would you be buying any of these names?
Amongst the three that you mentioned, our call is more sanguine towards M&M. Stock is corrected reasonably, more than 35%. Trades at around 10 to 12 times 1-year forward core price to earnings, and the subsidiaries are also doing well. So while there could be some more bad news in terms of monthly numbers here and there, I would be very interested in looking at that name at this price now, apart from Maruti. But by and large, auto space looks good now after the correction that we have seen in the last 14-15 months of around 25 to 30% in the large caps, excluding Tata Motors, because that's corrected more. Two-wheelers, I will still be more cautious given the way market share pans out and a lot of competitive intensity out there and reluctance to take prices up. Plus, volume has been also moderating on that front. So I would be more, biased towards four-wheelers at this moment.
Okay. Well, Sonia has tried her bit about Ashok Leyland, I'll have to say. We have only a minute left for the opening bell. Is there any drug stock that you like, Gautam?
Which stock, sorry?
Drug, pharma.
Pharma, I'm still underweight on that sector, but if I have to choose one, maybe I will go with Lupin. But what I've seen in pharma over the last 5 years is that the earnings pool has just been stagnant at around 19,000 crores for us, for the set of stocks that we cover at Motilal Oswal for the last 5 years. The number that we have seen in FY15 was 19,000 crores. And again, for FY20, the projection is at 19,000 crores. Plus, there are so many issues on FTA front, compliance issues, and pricing erosion still going on in the largest market. So I would be underweight that space.
Okay. Oh, that was a photo finish. But Gautam, please don't go away. We would still like to ask you some more questions. It's just that we have to look at the opening rates, which should be kicking in. There are some substantial amount of gains that one can see in the public sector banks at this point in time. We will have to see whether that is retained. But at a Nifty level, it looks like it's going to be a very flat start.